Suresh Manglani joins us now, Executive Director and CEO with ATGL. Suresh, good morning. Thank you for joining us. Okay, Suresh, good quarterly numbers. What are the drivers driving this earnings season? What are the factors which will continue for the balance part of the year?
Thank you. Thank you for inviting Adani Total Gas once again on your channel. I think the key drivers to bring the healthy outcomes physically and financially has been our mandate from both promoters, Adani Group as well as Total Energies, to continuously enhance the reach of infrastructure. And if you see the way we have been enhancing both PNG and CNG infrastructure to the large masses of customers, that's one critical factor driver. Second is certainly the recent, effective April 23, we saw the gas pricing reforms both for APM as well as for HT-HP domestic gas. And that enabled us to promptly reduce our prices and make the PNG and CNG affordable for the consumers. And the third, which comes from a DNA of both promoters, Adani Group and Total Energies, is our eye on digitalization, robotization, automation, and operational excellence. These three factors have combinedly enhanced the volume for the this quarter, 20% year-on-year basis for CNG, and overall PNG and CNG volumes have grown up by 10% if you see on year-on basis. So these have been the key drivers for our healthy outcome of physical numbers as well as the financial numbers.
Gas price trends, because as winter is approaching, you may actually see some tightening.
You see, gas prices gets decided or keeps moving up and down based on several factors: geopolitics, the storage status with various European and other countries. So certainly in the winter is one of the factors where the gas prices starts getting upward. The good development is that India now, over the last couple of quarters, have been enhancing the domestic HT-HP gas, and that has enabled us to build the portfolio. So from while winter would see some sort of a tightening of the gas prices on the RLNG front, but on a domestic side, since there is an APM and the HT-HP gas pricing reforms are in place, we would be in a position to provide competitive and affordable gas to a large number of our consumers.
What are your infra and capex plans going forward, considering that you're one of the largest player in the CGD industry, and at large that commitment needs to be fulfilled?
It's a very good question. As we have been stating in even the previous quarters, that our stated capex is that we will be investing 15 to 20,000 crore over the period of 8 to 10 years. The key target for us is taking the 500 CNG stations to cross more than 1,100 stations in the near future. Almost 800,000 customers, we have to grow to 3 million in the near future. And similarly, there will be a growth, significant growth in the our backbone steel and MDP pipelines. So we have, as I have been saying, that robust capital management and allocation policy in place, and we expect to run rate of 1,500 to 2,000 crore per annum in the next few years.
Now, when we spoke to you last time, you said that you are looking at building 3,000 to 3,500 EV stations. How many have you managed to build?
So, I'm very happy to inform you that we incorporated a few months back the e-mobility SPV within Adani Total Gas. And within a short span of time, we have been able to establish 221 charging points across 64 locations in 9 states. And as I'm speaking to you, almost 600 more charging points are at a very different stage of development. Many are going to be getting energized once we get the DISCOM connectivity. And the good part is that we also have a healthy pipeline on the acquisition of a new locations. So we are on our target to set up 3,000 charging stations in the near future across pan-India basis. And the target is that we grow our charging points across the format of B2B. We are adding several B2B business partners, B2C, so that public can come and charge their vehicles and their strategic location. And also our intent is to create e-mobility hubs across the country.
On the bio business, you've awarded a municipal solid waste building plant. How important is this? I mean, do you think this is a business which you can really scale up, especially in terms of managing bio business or city waste?
You see, this is one of the most critical nation building agenda. We are currently third or fourth in the generating the municipal solid waste in the world. Around 61 million tons of a municipal solid waste is getting generated, and the way our lifestyles are changing, hopefully we would be number one in generating the municipal solid waste. So since there is a technology available to convert this municipal solid waste to the CBG or several other products. So we have taken a decision that we would be exploring opportunities to help the municipalities across the country and convert this waste, which is completely getting dumped across our cities, to the CBG. And recently in this quarter, Q2, which is the result we announced, we are happy to announce you that we have won 500 tons per day MSW, municipal solid waste contract from Ahmedabad Municipal Corporation. And all the work is going on currently for developing this project. And we are looking forward for many more such opportunities across the country. Besides municipal solid waste, our SPV on biomass is also looking for non-MSW based development of the biomass project. And as your viewers are aware that Adani Total Gas is currently building India's largest 600 tons per day agri and cattle dung based CBG project in Barsana near Uttar Pradesh, and we are hoping that phase one of that project will be commissioning in this financial year. And we are also looking forward many such opportunities across the country.
Sureshji, appreciate your time and wish you and everybody at Adani Total a wonderful year ahead, and festival greetings from everyone from ET Now.
Thank you very much for inviting Adani Total Gas once again. Thank you.